Hello, good evening and welcome to everyone. Today's topic is role of internal auditors in fraud detection and prevention. Today's topic is very crucial because it highlights the significant contribution of auditors in safeguarding organizational integrity and it educates professionals about the evolving fraud risk and equips them with strategies to identify and mitigate these threats effectively. This session also aims to foster awareness of emerging tools and techniques in fraud prevention, enabling auditors to stay ahead in combating financial and operational malpractices. For such an important topic, we have a very renowned speaker, CA Kawaljeet Kaur Soniji. She is a seasoned professional with over 18 years of experience in fraud prevention, detection, and banking. She is a qualified chartered accountant, a certified fraud examiner, and a certified international investigator. Her extensive contribution includes serving as a committee member of the PhD Chamber of Commerce. She also acts as an advisor to the MSME India Forum and she is a member of the Center of Audit Quality ICI. Additionally, she is an authorized faculty member at GCI, a community director for ACFCS India chapter, and the cyber investigator and trainer. She is also the president of the Global Association of Forensic Accountants, that is GAFA. Her expertise spans a broad spectrum of forensic accounting and cyber investigation, establishing her as a key figure in the field. We are very obliged to have you, ma'am, here. I would request you to take over with the proceedings. Thank you.
Thank you so much. Thank you so much for having me once again. Now, before I start my discussion on what is the role of internal auditors when it comes to fraud prevention, I would like to just share a brief presentation just for reference purpose. So ultimately, most of us as an auditor are involved in our day-to-day checklist driven work where we check compliances, we make sure that our clients are abiding by all laws, regulation in the land. We are also very, very particular about doing value addition. And that's actually the core of internal audit. So if we go by definition of what is internal audit, so internal audit is an independent, objective assurance and a consulting activity. Now, when I say consulting, that means the ultimate objective of internal audit is to add value. If we as an auditor are not able to add value, that means we are not able to fulfill the objective of internal audit. At the same time, we see frauds everywhere, starting from our day to day life. The moment we get up, we start getting calls, we start getting messages. Somebody asks for our OTP, somebody gives us free holiday, free credit card, and so on. Sure. So now it's very important for us to really understand what exactly is fraud. And when we understand the real meaning of fraud, we will take it forward and discuss that do internal auditors have any responsibility when it comes to fraud detection? Most of us would believe that this is not our responsibility because we are not an investigator, but that's where we have to really get more clarity. So that's an objective of today's brief discussion, where I would like to touch upon as to what is the role of auditors when it comes to fraud detection. So before that, let's talk about fraud, a word which is like very serious, which is something which impacts our day-to-day life a lot, be as an individual or as a business. Fraud is a pain for everyone. What exactly is fraud? What is the difference between fraud and error? If we go by definition, the definition is pretty simple, that any act which is deliberate, where the intention is there, we call it fraud. So if I'm doing a mistake where I do not even know the consequences of it, or if it is unintentional, we the thing an issue, because sometimes we cross that boundary without even realizing that we have crossed it. Picking up pen from office seems very harmless. It doesn't hurt much. Technically, this is called asset misappropriation. And you'll be amazed that asset misappropriation is words most frequently done corporate fraud. Words. Such a small thing, a small pen, and that's it. See the cumulative effect, not just monetary, but otherwise. So let's say a pen would cost 10 rupees. 10 rupees multiplied by number of employees, and then multiply it with frequency. Even monetary amount would not be very small. And more than monetary, as we discussed, it is intent. Now let's say a company is $1 billion company. It will say, hey, it's such a small thing. Why would we waste our resources to investigate something which is as small as 10 rupees? All right, sounds good. You have already given a clean chit, or you have already given a green light to employees that as long as the fraud is small, go ahead. If a company cannot stop a fraud of 10 rupees, it cannot stop fraud of 10,000 crore rupees as well. Because ultimately, the difference between fraud and error is nothing but intent. An intent is wrong. Doesn't matter what was the monetary limit. Why am I stressing a lot on monetary part? As a thumb rule, when we as an auditor, we pick up sample. How do we pick up a sample? And a transaction which is material, a transaction which is of higher value, isn't it? Most of the time, auditors pick up higher value item and audit it. However, this is traditional approach. And especially when it comes to fraud, the fraud has nothing to do with monetary limit. 10 rupees fraud, a fraud. When Vijay Mallya would have taken loan from bank and run away, probably he would have thought something similar. Such a small amount. Now, you may argue that, hey, 400, 500 crore or 1500 crore is not a small amount. Yes, it is not small. Now, think from India as an economy and then think about 500 crore. The transaction would be as immaterial monetary wise as it would be 10 rupees spent for a $1 billion company, isn't it? Probably he would have thought something similar. What will happen if I, take a 500 crore loan and run away? India has a lot of money. It's a public sector bank. What difference will it make? So the message what we should take away from here is that gone are the days when we should pick up the higher ticket item and check it. The fraud or the red flags could be everywhere. It may not be in one single entry, it could be spread over multiple transactions. So that's where it's very important for us to understand what is fraud. So I hope with this small discussion, you would have understood what is fraud. Now, when we understand what is fraud, then the question comes to our mind is to why people do fraud? What's the need? Most of us associate any crime or especially financial frauds with need. But can you anybody tell me what was the financial need of those rich people who are committing crime like Nirav Modi, Vijay Mallya, Enron, and many other brands? These people have all the money which we could imagine. Why are they doing it? So there is a famous triangle called fraud triangle. There are three angles which are must for any corporate crime to happen or a financial crime to happen. The first, the opportunity. Each time a company has weaker internal control, they give an opportunity to criminal to commit crime. I'll take the Vijay Mallya case again. Now, why am I talking about those cases? So, for example, these famous cases which we all of us are aware. That's why I picked up those cases which are very common. Say Vijay Mallya, say Nirav Modi. So let's say Kingfisher took a loan from State Bank of India, did not repay, siphon out the funds. Is it entirely a problem with a borrower? Would you not agree with me that bank was at fault too? If bank would have monitored it properly or bank would have done a proper due diligence from the beginning, would not been able to do it. Who gave the opportunity to an outsider to commit crime? I'm an ex-banker myself, and I can tell you that it is, I would say, close to impossible that without insider involvement, a third party can do any crime against bank. Now, involvement could be two-way. One, somebody supporting. The second, negligence, weaker internal control. Both are a support from a bank to an outsider. Coming back to my fraud triangle, the first angle is opportunity. Each time your client has a weaker internal control, it is giving an opportunity to an outsider to commit crime, or it's giving an opportunity to any insider also to commit a crime. If an employee is able to take bribe inside the company, that means the message is not strong enough in the company to combat such corruption scheme. Coming back to another case study, say Nirav Modi's bank fraud. I'm sure most of you would have read those case studies, but I'm not sure how many of you would have tried and understand that whatever angles we see in these case studies are not coincident. Say in PNB, RBI audit did not happen for 7 years. One person was involved from end to end transaction in foreign exchange. Internal auditors never highlighted those issues for so long. It cannot be coincidence. In Kingfisher case, the company's CEO was changing every 6 months. Why bank did not raise any concern? They gave such a high exposure. Top management is changing every 6 months, which is absolutely not normal for such a big company. There were a lot of operational angles in the financials of Kingfisher. Why bank did not bother? Today, if you or me go to any bank and ask for loan, I'm sure you would agree that bank asks 10,000 document from us. In Kingfisher, the bank collateralized brand value, which we as CA call it goodwill. And I'm sure we all know that how goodwill valuation is done. It does involve a lot of subjectivity, lot of assumption when you do the valuation of goodwill or brand value. Can you and me go to bank today and say, hey, give us a loan basis our goodwill? Bank will never give it. Ideally, they should, we are professional chartered accountants. Our goodwill should be much, much higher than that. But bank says, hey, we do not trust your goodwill. Then why Kingfisher? Why Vijay Mallya? So we cannot say that it's always fault for outsider when these kind of frauds happen. Here, the role of internal auditors cannot be ruled out. The controls were absolutely weak. Banks were not monitoring such a high exposure continuously. Why internal auditors never raised any alarm? If you see this, I'm sure many of you would already be knowing famous, infamous cases, I would rather say. Stamp duty, the 2G scam, Commonwealth scam. Now, why I'm showing you these pictures, which are older? Do you know who raised an alarm? How these frauds came into picture? So these are public sector enterprises. The audits are done by CAG, Controller and Auditor General of India. The auditors of CAG, they were the first one to raise an alarm. And basis their reports, the further investigations happened, and then we got to know about these kind of scams. So auditors raised an alarm, not an investigator, not someone else. That is how the role of auditors comes into picture. Though these are pretty old cases. So when, for example, when Commonwealth cases happen or those Telgi stamp paper related scam happen, we did not have those specific provisions which could say that what is the role of auditors when it comes to fraud detection. However, today things have really changed. The role of auditors have really evolved. And it's time for us to understand what's our role and responsibility in fraud detection. A famous line: auditor is a watchdog, not a bloodhound. However, the definition has to be revised. The time has come where auditor has to not be just a watchdog, but actually get into a mode of bloodhound. Normally, a question comes very frequently: who has primary responsibility of fraud detection and fraud prevention? Who do you think? Management. So the answer is management has a primary responsibility of fraud prevention and detection. However, it does not mean that auditor has no responsibility. It may not be primary responsibility of auditor, but it does not mean that it is not the responsibility of auditor. So I hope the primary and not having any responsibility, we understand the difference between two. There are three line of defenses. Auditor comes as a third line of defense. However, we still have a very prominent role to play. And it is not just what I'm saying, this is what Company Act 2013 says. This is what international standards on audit also say. Internal audit is an independent, objective assurance and consulting. We have to focus on value addition, value enhancement, value creation. Each time we do risk assessment while doing our audits, fraud risk is a very, very prominent risk which auditors should look at. Even when your client says that our company never has a fraud, frankly speaking, if you ask anyone, whether it's a Lalaji's shop, whether it is a $1 trillion company, management will always say the same. हमारी कंपनी में फ्रॉड नहीं होता. We have a very strong controls in place. But that's what company choose to believe. It may not be reality. So our task is not to go by what management says. It also is to do our independent fraud risk assessment. There is a word which we use in internal audit these days called risk-based audit. But I'm afraid not many of us understand what is the meaning of risk-based audit. The risk-based audit does not mean that while doing audit, you realize there is a risk and then you increase the scope of work or you do your auditing around it. This is not called risk-based audit. The risk-based audit is an audit where we find out the risk before we initiate the audit. And then everything should be around that risk. For example, our scope of work. For example, what kind of resources are required. For example, what should be the deadline, everything. So ideally, the risk should be assessed first and then audit should be started, not other way around. And when we do risk assessment, please understand that every business, regardless of the industry, is prone to fraud. The nature of fraud may change. The quantum of fraud may change. But fraud risk cannot be ruled out. Even when the business says we have topmost security levels and you have thousands of SOPs, with my personal experience of consulting in fraud, I would say those kind of businesses are more prone to frauds because of complexity, because of layers. Fraud can happen in a very small shop. It can happen in the biggest of the brand. It can happen anywhere. And it can happen in any industry. Any means any. That is where the role of auditor comes into picture. And the role include detecting, preventing, and monitoring fraud risk. It may not be our primary responsibility. However, we have to support our client in doing those activities. There is ISA 240, International Standard on Audit. ISA 240 very specifically mentions that auditors should perform the audit procedure for early fraud detection. There are two words in frauds: green flag and red flag. So green flag is something where we believe all is well. There's no problem at all. Red flag means matured symptom. Either fraud has already done or it is about to happen. Or I'll just give a simple quick example. If somebody has a bit of cold cough, we generally tend to ignore, believing it's just a small cough and cold. Why to worry about it? But if you don't take care of yourself, The same symptom will go on and on and on, and it may result into something which is more serious than that. So the takeaway is, the moment you are a little sick, pay attention to it. Don't ignore. If a company has found out an early warning sign that something is not right, company should not ignore it. Company should focus on it, and you should try to, find out the solution and the problem at that level itself. Don't wait for that small problem to become a huge issue. And that's where ISA 240 also talks about the auditor's role in early fraud detection. Very important for us to focus on this part. Once fraud is done, it's done. Then all you can do is doing a postmortem activity. Go back, find out. You may or may not be able to find the evidences. So each time we as an auditor find any signal or any irregularities, anything which is not normal, it should be highlighted. It includes any fraud related inquiries, analytical procedures, control assessment, brainstorming. The auditor should focus on it. In a famous discussion, somebody said that fraudsters are 10 times ahead of internal auditors in any company. So it is high time that we auditors outsmart the fraudsters. We have lots of capabilities. All we have to do is we have to channelize our skill and tools in a right way. Now, it's not just global standards talk about role of auditor. Our Company Act 2013 also talks about it. There is a section 143, subsection 12, which says the auditor should highlight any kind of fraudulent activity in their report. So it talks about fraud related reporting. So if the first thing auditor has to do is they have to report their finding to the management, whether it could be board or the management as the case may be, depending on the size of the company. So ideal reporting of us, especially fraud related, is to board. Auditor has to report to board. So we will be reporting to board, and we will request a response within 45 days. In 45 days, if management does not respond or they do not take an action, auditors have to report it to central government within the prescribed time frame. That's what Company Act section 143 talks about. If auditors do not do it, it may be considered as a professional misconduct. So auditors does not receive any response, they can send the report directly to the central government. At this point, I would like to highlight an interesting point. As an auditor, we are abide by code of conduct, right? Professional conduct or code of conduct. One of the code of ethics, which all of us are aware, is confidentiality. So we have to always follow the confidentiality rule. We will not be disclosing the detail of our client to an outsider. That's a confidentiality rule. But in these cases, the confidentiality rule does not apply. Let's say if auditors say, hey, I did not report because I'm following confidentiality code of ethics. This is not a justification. This has happened in the case of Satyam. So in Satyam's case, the auditors used that weapon. They said we just talked to management. We did not speak to outsider because we cannot. So we are chartered accountants and the code of ethics are applicable on us. So this is not a right justification at all. Your code of ethics never say that you follow the wrong things. And in these cases, since you are reporting about fraud, no code of ethics will stop you from doing it. Right? So confidentiality has to be maintained for client, but at the same time, not at the cost of hiding the truth. When confidentiality clause comes in section 143, it says that auditors' confidentiality can be protected. So if auditors have reported to the government, their names may not be highlighted, that who did it. So this is how Company Act 2013 talks about role of auditors when it comes to fraud prevention or fraud detection. Company Act section 143 also talks about what is board's responsibility. So it says that the primary responsibility lies with whom? The board. The board has to have proper prevention mechanism in place. They have to make sure the companies do not have a frauds. That is about regulatory part. Even if it is not a regulation, let's assume for a moment. And if you are an auditor and you think that why should I bother about it? It's not my task. My task is just to check whether the controls are being followed or not, whether the compliances are not done or not. Then I would say it's a very short termism. You're just thinking for very short term. And I'm being practical. Many of us also think, why should we bother about it? One, that it's not my scope of work. Secondly, when I will be reporting this, probably management will come back and say, hey, you only investigate and tell us. Yes, it can definitely happen. But just because of that, you should not stop yourself from not reporting. It's our definite responsibility to do it. And think from practical point again. Today you have not reported. Tomorrow fraud comes out. The first question all the regulator will be asking, what was auditor doing in the company? For example, a couple of minutes back when I was talking about Kingfisher or Nirav Modi case, I said the same. By auditors never highlighted the issues. So we can never safeguard ourselves from these kind of questions. It's better that we go ahead and report. Then comes fraud risk assessment. So fraud risk assessment says prevention, detection, investigation, and response. These are 4 steps. A company with a very strong internal control and a very strong and independent audit team overviewing the internal control help us with prevention. And as always says, prevention is much, much better than detection. But then there is always a possibility that despite having the bestest of measures, the fraud still occur. If it does, then time to detect. So there should be proper controls in place that if unwanted activity occur, it should be detected at early stage. These days, most of the controls are automated. But remember, machine does what you ask it to do it. There are famous case study like Satyam, where the invoice numbers were manipulated. Fake invoices were entered in ERP. Just because your client is using automated system, it doesn't mean that machine will check everything on its own. You are the one who you are giving the commands, right? So be cautious. Then third is investigation. Suppose the unwanted event has already occurred. Then it's time to get independent professional. It could be in-house or it could be outside to get it investigated. Now, in some cases, internal auditors can also take the task of investigation. However, it's a separate assignment. If you are an internal auditor in a company and you are going to investigate, then there has to be two separate assignment, and most of the cases maybe two separate teams with right resources, and then response and prevention. They say that history repeats itself. A company where the frauds have occurred, it may not stop here. It might repeat as long as the controls are not set. If the weakness is still there in the system, someone, if not today, tomorrow, once again will try to exploit it. So it's better that we have a proper mechanism in place that if one time one unwanted activity has happened, it will never be repeated again. So that is how the fraud risk assessment should be done. So far, we have talked about what is fraud, what is the role of auditors. So, key responsibility of IA function is to examine any risk in internal controls. There are two words when it comes to IC, internal control: qualitative and quantitative. The control should be both effective as well as efficient. Just because company is having too many SOPs or control, it doesn't mean that company is safe. By making SOPs, company cannot be safe. They have to make sure that those SOPs work in practical life too. Correct? So that's where control should be there in quantity as well as quality. Company has to ensure that a company and its employees are abiding by laws and regulations. So we have to make sure all compliances are done, and then we have to make sure that proper recommendations are given. The role of IA is also involving consulting. We cannot do it, but we can always tell management how to do it. So please recommend the suitable thing when you find any fraud risk. These could be some control strategies where we should detect fraud with risk indicators. There should be continuous monitoring. Fraud is a very dynamic factor. It, it may come out of sudden and then it may vanish out of sudden. So that means it requires a control, a continuous monitoring. Now, leverage artificial intelligence and machine learning. Earlier, we were doing all things manually, but since we have technology and especially we are moving more and more into AI, so with help of AI, we should try and leverage the technology in our favor. It can do a lot of tasks which is humanly very complicated or time consuming, or sometimes there could be a lot of misses. So one of the best part of machine learning that it can analyze very large chunk of data in a very short span of time, and it can also collate data from internal as well as external sources. That's where you get a broader picture. So we should use the technology in our favor. We should adopt an adaptive security model and make sure the company has effective internal controls. So as I said before, control should be both effective as well as efficient. Now, once we have understood what is fraud, what is the role of internal auditors in fraud detection, quickly let me tell you what is forensic audit. Not many people really know what is forensic audit. So, in a very quick manner, if I have to define it, an audit which is litigation supported, it's called forensic audit. That means a fraud, um, So if your client has any um, intent to take the case to the court today, tomorrow, and any time, any audit which is supported for this activity is called forensic audit. The forensic audit may not be same as audit. It's actually not as audit. So just because in forensic audit we use the word audit, it doesn't mean it's audit. There are a lot of difference between two. So these are some key differences between audit and fraud examination. Our audits could be recurring. Fraud examinations are non-recurring because it's need-based. The scope of investigation is very specific. However, the scope of audit may be generic. The audit is something where we give our opinion. However, in fraud examination, we affix the blame. The audit could be non-adversarial, fraud examination could be adversarial. So when I say adversarial, that means in audits we do not accuse anyone. We don't say, hey, you have done it. In fraud examination, we find evidence and say, hey, you have done it. So these are core difference between audit and fraud examination. They have some connecting points, but they're not one of the same. There are different tool and techniques we use in our fraud investigation. The first is investigative interview, which is very, very popular technique in investigation. Apart from that, we use due diligence, covert operations, then digital investigation. So more and more, all the investigators are getting into digital investigation. You may have heard about e-discovery or digital forensics and so on. Then transactional analysis, largely done by banks and financial institute, finding the trail of money laundering or any type of financial frauds, and data analytics. So largely these are tool and techniques we use in our fraud investigation. Which needs to be used where entirely depends scope of work. In most of my training, participants also ask about the software to be used and so on. So all we have to understand that the software is just a tool. First, you should know what is the scope of work. What do you want to achieve out of it? And once you know what you want to achieve out of it, then pick up a software. If you're planning to get into investigation at any point of time, my sincere advice that don't blindly invest on technology. First, you should know the need. What do you want to achieve out of it? And then accordingly invest in the softwares. So these are some of the tool and techniques we use. And that is largely about role of internal auditors when it comes to fraud investigation. Once again, I would like to emphasize that gone are the days when auditors did not step into the shoe of investigator. They always have a very clear cut boundaries that this is audit, this is fraud investigation. We will not be crossing that boundary. But these days, since businesses are getting complicated, the frauds are everywhere, the role of auditors have really increased. So far, if you have not upgraded your skill set in this area, my strong recommendation to at least have some skill enhancement in this field. This is need of an hour. This is something which gives you more career opportunities. Also, when everything is becoming robotic, digitized, it is very important that we as an internal auditor should see our role beyond checklist. Today, we all talk about ChatGPT, we talk about AI tools, and so on. Now, if somebody has to do a checklist driven work, especially in internal audit, imagine why somebody need a professional like you and me. We can give it to the robot and robot will check it. The 10 item has to be checked, robot will check 10 item. So our intelligence and capabilities do not lie in the checklist driven work. Think beyond it. Why it is called artificial intelligence? Because technology is learning from us. So imagine and understand we are always superior in our analysis, in our thinking, and our interpretation of facts. Technology is learning from us. So use your skill set, whatever XYZ capability and skill set you have today, but build it upon it. When you do not upgrade your knowledge, the knowledge becomes stale. Use it and upgrade it. So that's my sincere advice to all the viewers who are watching this, and that's, I think that's all from my end, where I just wanted to highlight an important aspect of frauds in the business and what would be the role of auditors when it comes to fraud detection and fraud prevention. So that's from my side. Now over to you. If you have any questions, anything you want me to explain further. So any questions, Nehal? Anything you want me to
Yes, sir.
explain?
Yes. One of the speaker has asked, can the internal auditor be held responsible for failure to detect the fraud?
So as I said, the auditor's primary responsibility is not to detect the fraud. So whether they can be held responsible or not, that entirely depend on lot of aspect and circumstances. For example, if I'm an auditor, the red flags were right there in front of me and I ignored, then the answer is yes, I can be held responsible. However, if that fraud detection requires a different kind of skill set which I may not possess as an auditor, I may be not liable for that. So, in order to prevent ourselves from such issues, each time we come across any red flag, we should highlight and we should recommend management get it investigated.
Another question is, if there are multiple delays in compliance, like a late deposit of PF, ESIC, then what to do?
In those cases, you should highlight and you should also ask management for their response. That is it deliberate? If it is deliberate, then the problem is much bigger. So in those cases, once again, we should highlight, we should report. Don't don't be afraid of your management's reaction. So I know most of us as an auditor, think that what our client will think. The client may say, auditor sir, don't report such thing. But if you agree with management, then one, that we are not fulfilling our role. Secondly, once again, we are thinking from short term perspective. Long term, we can be in a bigger problem by supporting our management.
Another question is whether any specific measures to be taken for internal audit of a cooperative housing society.
So every industry is different. In cooperative housing society, there are very different kind of angle which should be looked at. For example, the management structure, who's the real beneficiary, how the funds are being used, where the funds are going, what kind of businesses are being supported, those kind of things. So documentations are very important in these kind of industries.
No more questions, ma'am.
So that's my take. Every industry is prone to very different type of fraud. Now, if as an auditor we may use checklist in two clients, just tweak and tweak a bit. But when it comes to investigation, you have to always start from scratch. So if you are auditor of two different businesses, let's say a manufacturing and a bank, don't think that fraud risk will remain same. Banks are very prone to very different type of fraud than a manufacturing. So in those cases, we should try to learn the client's business and try to learn the business in a manner that if you have to do that business, how will you do it?
No more questions, right?
All right. So then thank you from my end and thanks for having me once again.
Thanks to our wonderful speaker, Kavaljit Kaur Soni, ma'am, for appraising us, and also my gratitude all for taking time to join this session and making it success. Thank you.
Thank you so much.